going to wrap. Money in the bank.
Rates are good.
Pretty exciting.
You know why? Why?
Free money.
You understand what I'm saying?
Hey, welcome back. Thanks for staying with us. This is the Big Money segment of the program. Kelvin's going to give us a little glimpse into the tsunami salami of the mortgage business and what's going on there.
I am. Rates are getting better. We can almost use that same bumper music again.
Yeah, getting down there.
So
free
low.
Money. Free
so
money.
Low. So rates did improve this past week due to some economic data that came out that wasn't as positive as prior. It's funny. It moves literally. It doesn't meet expectation by like 0.1%, and suddenly it's like, oh my gosh, rates are good, and they come down. So 30-year fixed rates, came down this past week. And I'd say a range to be thinking is probably 7.5 to 8, in that range based on property type, credit, all those sorts of things. And so that's kind of our new, hopefully we can stay there. I mean, we still were locking some people in the low 8s that were just banged up on some things. But
what's banged up to you?
Banged up is probably under a 700 score.
Under a 700 score.
Yeah, it's crazy, but that's where you're seeing those. But here's what's crazy. Unless, I'll give an asterisk.
Okay.
First-time home buyer. Mm-hmm. Right? So the loan level price adjustments, I actually wrote down here, because the loan level, they adjust things based on your credit score. So the lower your credit, the higher your rate, typically.
Right, makes sense.
Yep. However, for first-time home buyers, they're given an incentive, right? Freddie, Fannie, everybody's given an incentive there. So I was pricing out a couple different scenarios, and I have a loan partner, Lindsay, helps with things. I said, hey, run this, and send me. I'm like, this can't be right. This person has bad credit. Mm-hmm. This person has great credit, yet the bad credit person rate is better, significantly better. I'm like, what the heck? So I go in and,
does the PMI look different then or not? Does the PMI look different?
Yep, PMI will be a little higher, on them. But the rate was a lot better. I'm like, wow, that's great. And then you go and look, and there was no loan level price adjustment on it because first-time home buyer. I'm like, there it is.
And
what qualifies a first-time home buyer?
That you have not owned a property in the last 3 years.
3 years.
Yep, so it's a 3-year.
So if you got divorced and were renting to get your feet back in the feet on the ground, and you haven't owned for 3 years, then you would qualify as a first-time home buyer.
You bet.
Wow.
So that was kind of interesting, and I thought, so it's good. I mean, we're seeing our activity because rates, I mentioned earlier.
Dramatic decrease in rate.
Dramatic decrease in rate.
According to headlines.
I know, that's what you sent me, which was great. But we saw a higher increase in loan applications nationally. They said it's the highest loan application week in 5 weeks, blah, blah, blah. So, but what we're seeing, and this is why people should be making a move now before the end of the year. So we're trying to push everybody, make a move now, make a move now, make a move now. Why? Price reductions are viable. Seller paid closing costs, viable. Seller paid buy downs, viable. So we're seeing all this activity that we're getting in right now going, hey, people are getting a really good deals right now. And then
$140,000 under the asking price.
140 would be too aggressive, but having it be a little bit under is real, So that was, it's been good there. And if we think about next spring, if we do have a spring market and a bunch of, homes come on the market, rates come down a little bit, now you're going to be overpaying for properties again. Rates might be a little bit better, but you paid that higher price. So right now is a great time. So, we're encouraging everybody in our pipeline, man, make a move now, find the home now, because sellers want to sell right now before the snow flies. Mm-hmm. Would you agree with that?
I would agree that if a house is on the market from Thanksgiving on, you have a motivated seller. Because pretty much nobody wants to have their house on the market over the holidays unless you have to move.
Yep.
Or unless you've got a compelling reason to move. Otherwise, why would you do it? It's disruptive not only just because people are tromping through the house with snow on their boots and all of that, but it's like it's the holidays and people are just trying to live their life, and it's disrupted to have that going on.
Right. One of the other things we're seeing just from our perspective, is every deal is a tougher deal right now. So it's really important to roadmap these deals out. So as people are listening to the show, I mean, the biggest thing that we run into on our side is employment issues. 2 years.
What do you mean?
You need 2 years of employment history, no gaps. And you'd think, oh, that's simple, just write it out.
Right.
Oh, I cannot tell you how many deals we work on that's like, we have a gap here. Well, I think I was here, I think I was there, and then everybody's like trying to figure it out. And so really for a loan officer to map out what to do to get this to the finish line, really critical right now,
How bad did COVID come into play with that then? Because there was a lot of people that would have gaps, obviously.
It's okay. We just have to say then there was a gap here.
Okay.
I mean, just explain.
Just say it.
Just say it. Stop.
Okay.
God.
Yeah.
I'm baffled at how people try to skirt issues to try to get things done versus just tell me the truth. I'll make it work.
Figure it out.
I can't put it in one way and then have a surprise come up because trust me, every report under the sun is run on these things and they'll know.
Right.
So that's interesting. And then,
well, back to your point, Calvin, on you encouraging folks to pull the trigger now.
Mm-hmm.
So if you are looking to make a move and you are in a good situation, maybe you're in a month-to-month lease or whatever it may be, state of Minnesota is very seasonal. So when we're heading into this time of year, you are seeing those price reductions.
Yes, you are.
If I was going to take a calendar and say when would I want to sell and when would I want to buy, it would be this time of year heading right into right now
to buy.
Yeah.
Really? Okay. When would you sell?
On the calendar. I would sell probably March is really when you're going to start getting very serious about it. March, April, May, typically we have the highest sales. Then closing months are great after that, and a little bit of a dip in the summertime, and then kind of pick back up in the fall. Not as good as the spring market, but we'll have a spring market. I mean,
it's inevitable.
A quote spring market. It's definitely going to happen.
Yep.
There are companies that have moratoriums on allowing rentals to turn over during November, December, January, and so in February, March, April, these leases start coming due, and that's why these buyers start taking mortgage applications that increase every year. So for that first-time home buyer, that's a big portion of the real estate sales now coming back.
Yep.
Where it was a lot of older generation folks. Elective moves by people that are in my age group, maybe a little bit of your age group still, but then seniors clientele, the folks that are seniors age. So making those downsized moves, if you're able to sell your property at the best time of year, hopefully you have your home paid for and you're using cash then to purchase. That next property, which has come down in value a little bit, is softer. It's a softer value, more attractive. In price improvements, etc. So I mean, if your intention is to buy a home, with inventory where it's at right now, in a lot of communities, there are opportunities for you to take advantage of things that are a little bit softer, some incentives that might be given for new construction or sellers incentivizing with offering closing costs or interest rate buy down. So it's a great time of year. Certainly, if your intention is to buy. This time of year is not a bad time to be doing that.
Yeah, it's fun to run numbers and encourage people. And we're showing 1-0 buy down, so we're starting a point under or 2 points under. There's creative ways to make the payment palatable right now. So we're really encouraging again people to make a move now. Keith, we only have a couple minutes left. Talk a little bit about you had a really cool fundraiser at your property. Last weekend. Talk a little bit about that organization and what you guys do and what you're celebrating.
We had a fundraiser for the Joy Collaborative, and we can put the link below on the podcast here. But the Joy Collaborative, it's a nonprofit organization that was formed to go into a house with a handicapped child and make that a room, their bedroom, their play area, adaptable to that child's handicap, whether it's a sensory issue or a physical handicap, whatever it is. Work a lot with autism, and just to make that home a safe place for that child. And it's all done at no cost to the family. You have to apply for it. And they'll come out and they'll meet with you and make a determination of what needs to be done. And so we're fundraising for that event. We had 130 people at the mansion, and we were going through. It was great. We had some food, and we had some music, and we raised like $25,000 or something in that neck of the woods. The final numbers haven't come in. I know it's at least 25 for the organization. To go into a bedroom like that, if you want to sponsor like a bedroom for a child, it's $5,000. So you kick in $5,000, and you can be part of the design team. You go in there and just be part of that thing. Very, very, very worthwhile organization, great. And super. Families are just so grateful for it.
Good. Well, if you want to learn more about that organization, or if you want to have a conversation about making a home purchase yet in 2023, give me a call, 651-231-2500. Again, 651-231-2500. We'd love to have a conversation.
We can get them closed up in before Christmas.
Absolutely.
In before you can have that New Year's party in your new home.
In the new house.
Love it.
This is Real Estate Chalk Talk. Give us a call at 612-627-8000. That number again is 612-627-8000. Or, as always, log on to hittnergroup.com, HITTNER group.com. That's HITTNER group.com. And we'll see you next week.
You've been listening to your Real Estate Chalk Talk.